Gold and silver price forecast. Gold breaks symmetrical triangle at $4,059 as silver holds $58 next move. Central banks continued net accumulation of gold amid efforts to diversify reserves in a high-debt environment. Gold held $4,059, defending symmetrical triangle breakout with mixed candles and higher lows. Precious metals fundamentals supported by central bank demand and supply limits. As of July 13, the gold and silver markets are being propped up by continued central bank buying and only tepid expansion of primary mine supply. The World Gold Council's latest survey found 45% of central banks plan to buy for their own account in the next 12 months, and 89% forecast official sector reserves to rise. This sustained official sector demand has provided a steady market underpinning as global levels of sovereign debt remain elevated and central banks increasingly diversify away from traditional investment assets. New supply growth has been limited. Gold mine production has increased only modestly in recent years, partly due to maturing deposits and increasing costs to develop new resources. Demand also reflects the role of both metals for portfolio investment, including via exchange-traded products and physical holdings. As noted above, macro events such as the inflationary pressures and changing outlook for interest rates following last week's U.S. labor data will continue to have a bearing on demand positioning in the foreseeable future, while global sovereign debt issuance and the global energy transition will also support structural demand drivers across the metals sectors. Gold spot holds $4,059 symmetrical triangle breakout on 4H. The precious metal is currently trading around $4,059 on the 4H chart. Alternating green and red bars tried to push through the symmetrical triangle's resistance at roughly $4,091 while standing above the triple bottom support near $3,959. On this chart, the bullish rejection wicks and rising lows reflect the absorption by buyers. The 50-period EMA in blue, near $4,107, remains a major resistance to the upside. At a $4,059 price level, momentum is slightly on the neutral side, as signaled by the 40 reading on the RSI. The volume profile is also a great measure, with $4,000 to $4,091 being a very dense accumulation range. The price range from the previous $4,597 highs is forming a downtrend channel, and the price is testing the $4,091 resistance point of the breakout. However, the price is also forming a higher lows pattern, and the Fibonacci's confluence level also supports the short-term price. Based on this technical outlook, I would consider a long position around $4,059, targeting $4,140, while placing a stop below $4,091. Technical and macro analysis. Silver spot, $58. Technical structure and Fibonacci defense. Silver is hovering at a critical inflection point around the $58 psychological level on the 4-hour, 4H, chart. Following a sharp correction from its swing high of $69.85, the price action has transitioned into a tight consolidation phase. This range is currently testing the Fibonacci 0.236 retracement level near $58.62. The printing of alternating bars in this zone highlights a fierce battle between accumulation and distribution. However, the prevailing market structure favors the bears. A series of bearish red bars characterized by lower highs indicates that rallies are actively being sold. Overhanging this consolidation is the red moving average, MA, at approximately $62.81, which serves as a formidable line of resistance to any near-term upside. Momentum and volume profile dynamics. With the relative strength index, RSI, registering a bearish leaning 37, momentum remains neutral to the downside, signaling that the path of least resistance points lower. A deeper dive into the volume profile reveals that the $57 to $59 range represents a high volume node. While this zone historically acted as resistance during the broader downtrend from the $69.85 peak, it is currently attempting to hold as temporary support. The presence of prominent rejection wicks in this cluster paints a dual picture: immediate selling pressure on minor intraday bounces, paired with patient, defensive accumulation at the $58 floor. A failure to hold the higher lows established in this tight range will likely trigger a rapid liquidity hunt lower. Macro backdrop. supply constraints versus energy demand. Fundamentally, silver's downside remains cushioned by structural supply deficits. Because the majority of global silver is mined as a byproduct of lead, zinc, copper, and gold, primary silver supply cannot easily scale to match demand. Mine output continues to face persistent operational and geopolitical headwinds, which are only partially offset by rising recycling volumes. On the demand side, silver's dual identity as a precious metal and a critical industrial commodity supports its long-term floor. It is a cornerstone of the global energy transition, experiencing aggressive demand growth from tactical trade setup. Despite the strong long-term structural demand, the short-term 4-hour technical frame suggests further downside expansion before a structural bottom is found. Entry zone, short position initiated around $58 on a confirmed 4H breakdown. Stop loss, placed strictly above $59.36, invalidating the bearish structure if price reclaims the high-volume cluster. Take profit target, $55.60, aligning with the next key liquidity shelf below the current consolidation range.